Hey, YouTube family, welcome to the Kevin Strong Show. And in this video, we're going to talk about refinancing your mortgage and how to calculate your break-even point, how to determine whether or not it's worth it to refinance. And I'm going to give you a simple cheat code, so to speak, to determine when you are shopping for refinancing a mortgage or if you're shopping for a home purchase, how do you determine what lender to go with? There's a simple formula you can use. So welcome to the show. If you're new, start off by giving me the ultimate appreciation by subscribing and smashing the like button. Yes, I have not worn this hat in a minute. I started to kind of cock it to the side. You remember those guys in the 70s? They would kind of just lean in, like, girl, where my money at? I'm kidding. I'm too short to be a pimp. They probably would have kicked my ass. So I'm not glamorizing exploiting women. It's just a joke. So without further ado, let's go ahead and slide over here and talk about this refinance article. And like I said, near the end of the article, I'm going to give you my little simple cheat code to determine how to select a lender when you're getting hit with all these type of quotes and fees and things like that. There's a very simple way to figure that stuff out. So stay to the end for that. And I'm also going to talk about some stocks that I picked last week. Looks like I was 50-50. Really choppy market, but we'll talk about that near the end of the video. So without further ado, let's go ahead and slide over here and talk about this article. What's the break even point on a mortgage? If you're thinking about refinancing your mortgage, you should consider more factors than just the interest rate, like the break even point. So what are some of the things that you need to consider when trying to determine how to figure out your break-even point when you're talking about refinancing on an existing mortgage? So you need to add up your refinancing costs. They've got some bullet points here. They talk about lender fees. These are usually the origination and application fees. The origination fee is typically what the loan officer is charging to actually process your loan. Full disclosure, I am a licensed loan officer in the state of Washington and in the state of Maine, but I'm not active. My license is in escrow. But I was a mortgage loan officer for quite a few years back in Ohio. So I do have some experience in this area. Title costs, these expenses also include a title search and insurance. Third-party costs, which is kind of like a catch-all category, usually the cost of credit report that was ordered by the lender. It could also be for an appraisal or attorney fees. Escrow services, this would be put away for taxes and insurance. So a lot of times, as you all know, that they call it PITA, which stands for principal, interest, taxes, and insurance, PITI. And a lot of lenders will require you to quote unquote escrow your mortgage payment, which basically means they want to have your taxes and insurance included with your monthly payment, so you don't fall behind that. Some lenders, and I haven't been in the game for a while, may allow you to do that and pay your taxes and insurance outside of the monthly mortgage payment. If somebody wants to comment on that, they can educate the audience on that. But I know typically you have to have a little bit more equity involved in the deal before they allow you to do that. But most lenders under current circumstances are going to want that taxes and insurance included in the payment. So all of these expenses can make up 3 to 6% of what is left of your principal balance. So if you owe $200,000 on your home, expect to pay $6,000 to $12,000 in refinance fees for all of these things we just talked about earlier, right? Lenders fees, title costs, third-party costs, setting up the escrow, things of that nature. So determining your monthly savings is pretty much kind of self-explanatory. It gives you an example here saying that basically if your current payment is $2,750 and the new payment is $2,500, you're saving $250. Okay, so what is your break-even point? How do you determine it? How do you calculate that? Let's get down to the nuts and bolts. So right here is pretty straightforward. So if your loan expense totals, let's say $6,000 in this example, and your monthly savings is $150, that is what the formula would look like. So it would be $6,000 what it costs for you to refinance, and you're saving $150. So it would take you 40 months, 40 times 150, which represents the monthly savings, to equal the $6,000 it cost you to get that $150 per month savings. So a little bit over 3 years, right? 3 times 12 is 36, and a little bit over that, right? It's a little bit over 3 years to break even, 40 months. So, and it says it down here. It will take you 40 more, it's a little over 3 years to regain your closing costs. When I was in the industry, guys, back in the day, the rule of thumb was if you can't break even within 36 months, generally speaking, it's probably not worth it to refinance. Some people also had an old saying, another general term, if you are refinancing and your rate reduction is 2%, that also could be an inducement to refinance, because obviously now you're accelerating your principal pay down because you're applying more of your monthly payment towards the principal because of a cheaper interest rate, and thereby accumulating more equity as you make timely payments on your mortgage. So generally speaking, 36 months to get a break-even point to justify the refinance cost associated with the transaction. And from the interest rate reduction standpoint, could be 2% generally. Sometimes it could be 1% if you're going to be in the property for a long period of time, but that would also have to be lined up or compared with how much the closing cost is, right? So if somebody's saying, hey, I can reduce your rate by 1%, you're dealing with a credit union or some other financial institution that's not charging you a lot for closing costs, that still could be a goal for you and your family. That still could be something that you can do. So let's see here. Oh, shopping. How to use a break-even point with shopping for refinance. We kind of talked about that a little bit. So here's the simple cheat sheet for all of this before we start getting into the stock portion of the video. It's your APR. Sorry, mortgage guys. It's the APR. The APR stands for your annual percentage rate. That is something that they're required to tell you what it's going to cost per year to pay back the loan. So let me give you an example. Here's the cheat code. You're talking to all of these lenders, right? They're quoting you, let's just say, hypothetically, 6.5, another one saying 6.6, another lender saying 6.7. It's all over the place. One lender's got X amount of closing costs. This one has X plus 200 closing costs. The third lender has X plus 300 closing costs. It sounds confusing. At the end of the day, the APR is what really matters, because that's the annual percentage rate that you're actually paying back the mortgage. So let's boil this down to two lenders. One lender is saying, hey, I'm going to quote you 6.5, let's say, on a 30-year finance. And the other one says 6.7. 6.5, 6.7. You want to ask both lenders, what is the APR associated with the loan? If the first lender who told you 6.5 says 6.9, and the lender who told you 6.7 says 6.8 in terms of the APR, even though the 6.7 was higher, when you factor in the APR, it only went up to 6.8. So that basically means, in layman terms, there's not a lot of closing costs associated with that deal. The other one who quoted you 6.5, when they calculated the APR, they're saying 6.9. So there's more closing costs associated with that first loan. So the better deal is the 6.8 APR, because at the end of the day, if the loan amounts are the same, you always want to go with the lower APR, aka the lower interest rates. So if you're new to shopping for a mortgage, whether you're refinancing or if you're in the mortgage business of, in the loan business of trying to secure a loan for a purchase, and you're getting a little confused because you're talking to so many lenders and you have a certain amount that you are approved for on the purchase side, let's say hypothetically $500,000, then it's all about the APR, because that's going to determine the cost per year for you to pay back that loan. And obviously that's going to have a big impact on how quickly you can start applying your payment towards the principal balance to start to gain some equity in the property. So hope that helped out a little bit. If it did, give yourself a thumbs up. If you got somebody out there that's got something to add to that, please feel free to drop a comment. Without further ado, we're going to slide over here real quickly, talk about my stock picks. Looks like I was 2 out of 4. And I really had like 1 for next week. And then we're going to give you an update on the simulation account because I have not shared that screen with you guys in a while. So give me a second here, folks, to stop this and switch it over to the stocks. So this first one last week I had XLE. This was kind of a heavy loss. This one I think I hit up. I think it was about $261 I lost on this one. As you can see here, last week would be the 31st. No, I'm all over. I'm sorry. June. Friday was May 31st. And I thought this thing was going to start to swing up. I thought energy was going to swing up a little bit. In hindsight, this is clearly in the downward trend. I don't know what I was thinking about, but hey, I got to take the good with the bad. That one was an L. The other L was Coinbase. That was at 257 last week, which would be May 31st right here. Looks like it. Nope, I keep doing it again. We want June, May 31st. I'm sorry. Let's get this right here. So it kind of went up a little bit and then it came back down. You may call that so-so, but it's clearly down from last week. And at the time I was thinking about entering, even though I did not enter that trade, I did say that was something that could potentially go up. The other one was Meta. I'm going to call this a stalemate because if you go back and listen to the video, I said bear call, which is bearish, which means that you're playing an option for it to go down. But I said it looks like Meta's going to go up. So I honestly meant to say a bull put spread, which is bullish, meaning that I thought the stock was going to go up. But I said a bear call as I was describing the momentum going up. So I think I deserve actually a mulligan on that one. So that means Coinbase and XLE Energy were the 2 that were wrong. And the one that did well was TOT, the bond market. Once again, going back to the 31st. I got 31st just in my brain. I keep going back to all this stuff was the 31st. I meant to say June 7th. Sorry, last week was right here. Is when I said I thought this was going to swing up. And as you see, this was a nice swing up. So on Monday, the TOT was at 92 and it closed today at 94. Once again, if you are understanding options, that's a very, very nice gain of $2. And the one thing that I did enter next week was Ford. I'm predicting that Ford's going to go down. It broke beyond the 200-day moving average, which is right here. Looks like the MACD is rolling over. There's no confirmation, but it's clearly heading that way. And it looks like based on this Kellner channel, those who follow technicals, it looks like it's pressing down a little bit. So I have a put on Ford, I think at $12. And I'll probably only stay in that one for a couple of days. So let's finally take a look at this simulation account, and then we'll call it a show. I don't trade this that much. I need to start doing more on this thing and kind of giving you guys some more insight because the way I trade a bigger account is a little bit different from a smaller account. Those of you who follow me know I suspended the small account challenge. But to make a long story short here, as you can see here, as of I didn't have any recent transaction, the balance on this is $253,000. We started, for those of you who have been following me, probably about 10 weeks ago, less than 3 months at $200,000. So it's at about $53,000. We'll see. I'm going to be a little bit more active trading this particular account. See if I can push this thing up to $260,000. And if I can do that in the next 2 weeks, that would be a $20,000 a month average on the account. Once again, we started this almost 10 weeks ago at 200,000 and it's at 253. And I haven't done the analysis in terms of how many trades I've made in this simulation account and how many I got right, how many I got wrong. But if I had to guess just off the top of my head, I think I've only missed maybe 3 out of maybe 14 trades or 15 trades. That particular one has a very, very high success rate. So I hope you got some really good information out of the refinance. Like I said, keep in mind it's all about the APR, especially when two lenders are quoting you the exact same rate. You really need to get hyper focused on that APR because that's the devil in the details. I just talked to my friend from Thailand. He's going over to Vietnam for a while. So he's going to be in traveling right now. So we're going to hopefully try to get that nailed down in the next couple of weeks. Like I said, I'm really, really looking forward to talking to him about that. Been doing a little bit of research about Argentina, but there's some things about that just not adding up. So once again, thank you for hanging in. Once again, if you have not subscribed, please do so at this time. If you are enjoying my content, please do me the honor of just clicking that like button so YouTube will circulate this particular video to other YouTubers. Thanks, guys. Make it a great day, and y'all come back now. You hear?